What's up, traders? Time for that crypto monthly market wrap up. So we're going to get started here on the monthly Bitcoin chart. But before we do, I just want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we are on the monthly Bitcoin Bitstamp chart. And we can see here that essentially the market is giving us some pretty clear signals on this monthly chart. But in the past, some of these signals, because they're on such a long time frame, have been less than reliable in the short term, but have played out excellent in the long term. So we're going to get started with a few of our regular indicators here on the chart and see what they have to say along with price action. So first we have the TJD master moving averages here, and then we have our TJD TDMACD, and then of course we have the TJD jewel thief as well. So let's take a look at each one, see what we've seen in the past and how this looks. So we saw here in the bear market of 2014, 2015 that the 821 bull cross, when these turned green, led into the bull market and was the absolute best time to get into Bitcoin. We see here the same thing happen again when it was red down here. We're basically at the lows as we got the 821 bull cross. We went pretty much parabolic right afterwards, and then we just kind of came back for months. But eventually that 821 bull cross led us to new highs. Now, if you just bought right here and hodled though, you might have got scared out of your position on that Rona dump. So that being said, here we see in 2022, we had the 821 bear cross here, and now we're very close to crossing that bull cross back to the upside, but it does look like we're running into resistance at those moving averages, and it's starting to roll over, and the potential that we close back down below it, and then this actually could fail, is definitely a thing. So obviously we're just into the new month, so we don't know what's going to happen over the next 25 days, but we're not off to a great start. So as far as the TJD master is concerned, if we don't confirm the 821 bull cross, then this just looks like a failed breakup, and we're likely coming back down to go to new lows, retest the lows, or who knows from there. But it's definitely not bullish if we can't confirm the 821 cross. And at this point in time, because of where we're at now, it's probably going to be a month or so before that even takes place. So next we have the TJD TDMACD, and again we're just going to look for the same thing. What did it look like in the past in those like bull markets, and then essentially what does it look like now, and what kind of clues can we take from that? So if we just pop this up on the monthly, because this is on the monthly chart, it's going to populate over a longer time. So we actually don't even get the blue slope line until 2017 on Bitcoin, even though our history goes back to 2013. But we do see a bunch of green histograms here, and then the red histograms, that was essentially the top of the market. We roll over, we lose the slope line, and then we put in that bottoming pattern, and that of course corresponds with the bottom here as well. After that, we shoot to the upside, we get back on top of the slope line. We almost lose it right here with the Rona dump, and it looked a lot nastier in real time, but shortly afterwards, we're able to actually save the slope, get back on top of it, and then we can go parabolic. So we know the key is here, we want to see a bunch of green histograms, but we also want to get back on top of the slope line before those big trends happen. Here, it was green for a while. We eventually get back on top of the slope line. We go parabolic. We come out of the bear market. We see a couple of green histograms. We kind of go sideways, consolidate. Eventually, we get on top of it. It stays blue. We go parabolic. So here, we're nowhere even close to that slope line. So the possibility of us even getting up to it anytime soon is very, very low. We do have a bunch of green histograms, which is good. But to tell you the truth, when I look at this chart, I say it could be bullish, it could be bearish, but the truth is it needs time. And then finally, we look at the jewel thief down here, and essentially we just have the hard buys and the bearish control zone in green. We have the bullish control zone in red with the hard sell signals as well. And we'll see the hard buy came in on the monthly, basically at the bottom here. The hard sell came in on the monthly at the top here. The buy on the monthly here. But keep in mind that this had already run parabolic, and by the time we got the hard buy signal on the monthly right here, we were putting in a temporary top, and it was basically a year until we got back to that level. And if you bought into the FOMO here at about 10, 12, 14,000, you got cut in half, or like down 66% in that Rona sudden sell-off. Now, of course, all Bitcoin crypto people would just say, well, that was a black swan event, whatever. But the fact of the matter is it happened whether or not it was a black swan event. So it could definitely happen again. So here we're in the bearish control zone. We get the sell-off. We get the hard cross. I have it set to a strict hard cross right here, so it doesn't actually show up on there. But we did get the hard cross right here and the hard sell signal if you didn't have that strict cross set. And then that's going to give you basically your bear market. And now here we're getting the hard buy signal. But again, it looks very, very similar to that previous time where we had already run up quite a bit into resistance, and then it looked like we rolled over. So on the monthly here, we are getting the hard buy signal, but we should keep in mind the last time we got that hard buy signal coming out of the last bear market, we did see about a 66% pullback. So it's not crazy to think that Bitcoin is going to go back down and retest those lows based on the monthly chart. So now we're just flipped over to the weekly, and I did a full-on breakdown on exactly what's taking place right here, but we're just going to focus in on the same things. 821 bear cross takes place right here. We find support at the 200s. The bull cross starts. We have a nice run up, bear cross down to the Rona lows, find support on the 200s, bull cross, parabolic bull run. We see the bear cross here. We get picked back up with the bull cross, get back into it, and then here we go into a bear market. We got back into the market here on that bull trend, the 821 cross, and we're barely hanging on to the 200 exponential and simple. So in my opinion, we've done just enough for this to look like the start of a new bull trend, and now we're doing nothing more. Typically, in a market, when you see this 821 cross happen, when you find support and you're on top of the 200s, bots, algos, traders are going to trigger their buy orders and buy into momentum, and you're going to see a big spike like this. Typically, you'll see some kind of pullback afterwards, but you almost always see some kind of like contagion spike. And we're just not seeing that happen at all. Sure, we ran up off the lows 100%, but the truth is that's really not that much when you're still down over 60%. So in my opinion, we're hanging on by dear life here on the weekly, and it just doesn't look great. As far as the TDMACD, same type of thing. Whenever we're above the slope line, whenever it's blue and we got a bunch of green histograms, momentum's in our favor, we're running to the upside. But when we start seeing like divergences like this, where we put in a higher high on price action but a lower high on slope, that's definitely an indicator that this is unsustainable and we're probably going to be selling off. In this case, very violently. So from there, we got back on top of the slope line. It is blue. We're above the zero line. We do see a bunch of red histograms though, and we're on top of support. So we don't want to sell right now into support, but we don't necessarily want to buy right now either, even though we're at support, because we do see some weakness in the market. So we're kind of getting some cross signals here. And then if we look at the jewel thief here, you'll see all of the hard buys and hard sells. I do have this set to the strict criteria for those of you that use this indicator. I'm going to go ahead and turn on some of our drawing tools as well. We'll see here when we got the hard sell and we left the bearish control zone, that was the absolute top in 2017. We see here we got the hard buy and left the bearish control zone. That was the bottom in 2019. Again, the top here in 2019 got us out of that little fake away before we ever got into the Rona dump. So this is obviously much more reliable because it didn't have us take that massive drawdown. And then again, we exit the bullish control zone, hard sell. We see about a 50% pullback, find support, move back to the upside. And then again, we get a hard sell once more. And then that is the end of the bull market. We see one time where we got a hard buy right here and then it rolled over. We see the hard buy into resistance, which is typically a warning sign. And then again, we see the hard buy once again here. And then that was our nice little run up we got. But now we want to focus on just this little bit right here. We now have inside the bullish control zone, we now have the hard sell confirmed, and now it looks like we're starting to roll over. Now again, the same way we don't want to trust a hard buy completely into resistance because it could fail, we don't necessarily want to trust a hard sell completely into support because once again it could fail. But right now, what I'm looking at, it looks like we're very close to the 821 possible bear cross. We're very close to losing the 200s. We're very close to, basically moving back below the zero line and potentially losing the slope line. And obviously we already have the hard sell. We've exited the bullish control zone and everything is angled to the downside. So again, right now, it looks like the market wants to retrace, wants to retest the lows and then see where it can go from there. And then finally, we're just going to jump over to the daily here real quick and take a look. We obviously had this nice little channel off of that 50% retrace from the highs. We went slightly higher and then we entered into this descending channel. That was our bear market correction and it drove us way to the downside. From there, we broke out of that descending channel. We had the 821 bull cross take place. We reclaimed the 200s. We reloaded our position on the 200 simple. And then we went all the way to our target at 30,000, which was our low support right here. So we basically broke down from a key support level, put in a double top, hit the measure move to the downside, and then we back tested the breakdown. And then we were unable to get back above it. We see now we're still inside of one of those ascending channels. We see Bitcoin has been operating with the exception of a couple days here and there inside of this channel for like 99 to 95% of the time. So here we are doing the exact same thing. All price action has taken place in this channel. And then inside of that channel, we have a bearish channel. And now here we have lost that support. So could you draw this slightly different so that somehow we're still in the support? Well, we'll have to see how the daily closes. I don't necessarily like to redraw stuff, especially if it's drawn correctly to begin with, to kind of like suit a narrative. But this is the move we've been expecting. We've been expecting the retest of that previous high. We've been expecting the retest of the 200 exponential and then also that 25K level all line up around the same spot. So here we are. It's happening in real time. And honestly, right now, we're going to find out if this market is actually bullish or if we're getting ready to fail and roll back over. And to tell you the truth, I don't like the overall posture of the market. I don't like how the altcoins look. Bitcoin and Ethereum have been the strongest or some of the strongest in the space, and they don't look particularly well either. And the truth is right now, I think this is probably one of the most risky times to be deploying capital into the crypto space. I don't know if it's going to be some fundamental event where all of a sudden regulators start cracking down and that's what causes all the altcoins to crash and money to flow into Bitcoin. I don't know if suddenly they're going to turn the money printers back on and we're just going to go parabolic, but I do know that those things are going to happen, and then we're going to have some time to be able to make our decisions based on that new information. But trying to presume what new information is going to come ahead of time is impossible. So we might as well just trust the technicals for now. So technically we're on top of the 200 exponential and simple. They're both still sloped to the upside. So technically we're bullish, but we're coming back down to those retest levels. And this is kind of like the line in the sand where we find out, are people going to step up and buy this area, or are more people going to capitulate and sell? And if we're looking at this situation and taking a look at the actual fibs, we have our fib here from the bottom all the way to the top in green. And essentially we've been hanging out at the 236, just barely hanging on to it while we put in lower highs. So it looked like it was obvious we were going to break down to 200 exponential, which obviously we did. And that's why we were predicting it. And then our next move would be the 382 here as well. And that for me is basically our line in the sand as far as moving averages. If we lose the 200 simple there, we're going to be below both the 200s. And if we stay below them long enough, they're going to turn red. We do see that there's quite a bit of confluence though, right around that 23,800 level, as that's where the 200 simple will be when we get there. That's where the 382 is currently. And then we can kind of play our cards from there. I would expect at least some buying to come in and then a back test of the 200 exponential. In the meantime though, we probably bounce the 200 exponential at least a little bit and retest the 236. But oftentimes when we lose a support level, we find support somewhere else. We back test that previous support as resistance. And then if we can't reclaim it, we go lower. So that's what I'm looking for. I'm looking for a buy around 23,777. We could actually go much lower than that and I would still be okay. It wouldn't be bullish based on the actual moving averages if they went red again, but it doesn't mean they can't just eventually flip back blue. So the thing about the moving averages is they're obviously lagging. So the key is for us to identify some support and then take advantage of those levels when we get there. But we do want to continue trading with the trend. So as long as we're on top of the 200s, we're technically bullish. If we lose those levels, we'll start looking at the 0.5 of that move up. The next step down from the 382, that's around 22,000. And then we have what I call the deepest bullish retrace, which is the 618. So that's our golden fib, golden retrace zone around that 618. And essentially, if you're in a bull market, the most bullish of retraces is the 382. Everybody steps in to buy it, and then you go on to the next run. Medium is the 0.5 Charles Dow theory. And then the least bullish, but essentially like our kind of line in the sand for a bullish retrace is the 618. If we go lower than that, it doesn't mean we have to take out the lows, but it's much, much less bullish. So for me, the monthly looks okay. The weekly is definitely telling us we should expect more downside. And honestly, right now, the daily still looks okay, but we have a couple lines in the sand where that changes. So I'm not actually going to go into any other cryptos today. I'm not going to bother with total market cap. I'm not going to bother with Bitcoin dominance because essentially nothing has changed. The total market cap chart looks very, very much like the actual Bitcoin chart, and the Bitcoin dominance chart has essentially just been hanging out at resistance. We have no resolution. So we'll go ahead and wrap it up right there. I think the most important thing, or like the theme that everyone should have in their head right now as far as crypto is, don't bet with more than you're willing to lose. We're at a point in the markets, not just crypto, but stocks, bonds, basically everything, where we're going to make a decision one way or the other. We're either going to see a big breakout to the upside or a big breakdown to the downside, but we're very, very close. So rather than trying to position ahead of time and just assuming that you'll be right, I think the best thing to do is feel the market out a little bit and wait for it to give us some kind of an idea as to where it's actually headed. So yeah, that's it. That's our monthly market wrap up for cryptocurrencies. As always, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'll catch you on the flip side.